Hello, and welcome to this interview with me, Jukka Lepikkä, and our guest today, Christoffer de Geer, CEO of Bitcoin Treasury Capital, or BTCAB in short. BTCAB is a pure-play Bitcoin treasury company that's listed in the Swedish stock exchange not too long ago, 2 months ago. And before we dive deep into the company itself, Christoffer, could you tell us a bit about your journey into Bitcoin? How did you first discover Bitcoin, and what have you done in the crypto space professionally?
Sure. So, what I've been, I first found Bitcoin maybe 10, 12 years ago or something when I lived in China. And I was I lived in China and everything was in cash. So then to move back and forth between Sweden and China was almost impossible with cash. And since you, as a Westerner back then, didn't have a bank account, it was a very confusing process. So then I found Bitcoin you can just buy Bitcoin for cash, and then you have a digital asset that solves what banks do not solve. And that to me was just amazing. It was like very revolutionary. And since then, I've always been very, I've been really good at spotting bullshit from shitcoiners and those kind of players, because none of their supposed solutions solve my problem better. Like Bitcoin solves things, moving digital assets or value around better than all other digital assets, which makes it the king. And it's the only digital asset you need because you don't need double internets. You just need one very well functioning internet, and then everybody can communicate. Same with Bitcoin. The only digital asset you need is Bitcoin. The rest is irrelevant. And I understood that really in a practical way. So from that moment on, I've just done Bitcoin things. So we've done secure storage in China. We've done exchange, of course, like brokerage services. I was part of the world's first listed Bitcoin tracker. It's an ETN called, it was then called XBT Provider. And the product was Bitcoin Tracker 1. And then I went and bought some hydro plants, which I still own, and we mine Bitcoin in them, which is a really nice, it's a beautiful business model in that sense. And then,
That's very interesting. Can you
yeah,
elaborate on that? What are you doing with the hydro plants?
but it's the most logical thing. It's the most logical business model in the world, because it's just, like you have your own river and the water flows there. Nature provides that service for you. And then you put generators and turbines. So the water pushes something and the magnets are spinning. That gives you the electricity. And that's just, if you put Bitcoin miners with that, then the water generates the electricity that goes into the Bitcoin miner and generates Bitcoin. And then you just have a closed loop. It's a really beautiful system and business model, I would say. So all energy producers are Bitcoin miners by proxy. They don't know it yet. Because like if you have a high electricity price, you turn off the miners and you sell electricity because the electricity is needed out in the grid. If you have a low electricity price, the electricity price is not needed. So then you turn on your miners and you can get the overall world price of energy, which is Bitcoin. So then you get the baseline revenue. So having a Bitcoin miner with your energy production facility decreases your risk, because energy prices can stay low for a long time and then you get Bitcoin mining, or high for a long time and then you just sell your electricity. So it's a really beautiful business model. I really like it. And then we went and realized that since I measure everything in Bitcoin, beating Bitcoin, the hurdle rate is nearly impossible for a regular business. But then but how do you do that? You don't really. I mean, if you buy ETPs and stuff, you don't really beat Bitcoin, but you hold it. Treasury companies, when we found it, was the first time I saw something that can beat Bitcoin, because you generate more Bitcoin per share. So therefore, I went and started the Bitcoin Treasury company, because it's the next logical thing. It's where you should keep some, not all, but some of your Bitcoin, because that's a good way to generate yield on your Bitcoins measured in Bitcoin.
Very interesting. So you have been in this industry for a long time already. So how has it evolved during the 10 plus years that you have been inside the Bitcoin industry here in the Northern Europe?
Yeah, one thing, it started very like it's funny because it started very naively, like everybody has uh, wild ideas, and then it gets like, for example, algorithmic stable coins. You can just have a magical stable coin that it will work forever, and poof, it explodes, and then you have a bear market. And then but we can do smart contracts. That will be the new way to regulate law, and code is law. And then you have the DAO, and poof, you have a new bear market because it gets hacked. It looks like we're evolving into something more logical and less strange, but that's not the case. Like we do the same thing over and over. It's like Groundhog Day every 4 years. We have the bear markets because we get way too bullish, and I'm the same. I can't help it. I just get extremely bullish on. I'm always extremely bullish on Bitcoin, but still, like it's just the most. It's a really fun industry because we learn nothing. Then we just repeat the same mistakes over and over, and then it explodes and we start all over again, but at a higher benchmark. Bitcoin has 10x and then 10x and then 10x. So for example, I think this bear market that is coming at some point, it's always the case, will be some treasury company that goes, way too much leverage and then explodes. And then you see a cascading effect of treasury companies that are not managing their books right or have too much leverage that just explodes, and they get sell pressure and Bitcoin crashes and further sell pressure and so forth. So I think we're not going to learn anything this cycle as well. It hasn't evolved. We're still the same.
Yeah. So as you say, Bitcoin is very volatile and a high risk asset in that sense. But what is your long-term investment thesis for Bitcoin?
So it's the only thing that it's the measuring stick. So it's the only thing you should have. And then you have things that beat Bitcoin logically. Like for me at least, that measuring Bitcoin, it's the lowest risk because it's what you measure against. It doesn't go up or down. The Swedish krona goes up and down measured in Bitcoin. Sure, but Bitcoin is just one Bitcoin, which makes it a very stable asset if you measure in that way. That's not a practical way to do it today, though, because it's very volatile compared to the food you need to go and buy. So my mindset, I think, is a bit early. Maybe we're 30 years out or something before Bitcoin is the global reserve currency for all nations, and it's just the place you put your capital to store value over time. So that's where I think that's where we're headed, and but we're very, very early, and you can't really at the moment at least buy food with Bitcoin and so forth. So it's we're going to get there, but it's still a bit early. But I don't see how something that is the new internet, the next internet, but for value, that is a fixed supply, only 21 million assets, measured in fiat that we just print more of by the millisecond. Every single fiat as well. It's dollars, it's kroner, it's everything. How that cannot just infinitely increase. Well, I don't have a good explanation, so therefore I'm very, very bullish. It's just or it's not even bullish. It's stable, and then what you measure against is going down in value, because if you make more of something, Swedish kroner, of course the thing goes down in value. Even children know that logic. Bankers don't, it seems, but children do, and it's just so Bitcoin is just stable, but it's comparing it in Swedish krona, that's just decreasing. So Bitcoin will forever increase, and it's just nature. It's just the law.
So what do you think about the cycles? You mentioned already the 4-year cycle. Do you think that those normal cycles that we have previously seen still apply? Because if you look at the time we are coming towards now, we are basically coming to the end of the 4-year cycle as it has previously played out. Do you think we are near a bear market now?
I always think we're in a perpetual bull market, which is statistically very wrong. So I know that my response is incorrect from a statistical perspective, but I can't have any other view, and that is that we're always in a bull market. You need more Bitcoin. That's just what you need. There's no bear market. If it's red numbers, buy more. That's perfect. It's just the most valuable asset. It's mispriced today. There's no bear market. Just buy more Bitcoin. But if you measured, maybe it goes down short term, maybe. Yeah, no one knows really. It goes up and down. But I hope the 4-year cycle continues because it's quite a funny, it's a meme in itself. And it's a marketing tool for Bitcoin. And that's good. Like, I don't think we need to market Bitcoin. Bitcoin markets itself with its number go up technology. And that's very useful and good. But if it goes up in a stable fashion, that's not as headliney. If it crashes by 80% and then goes up by 10,000%, that's way better. It's just Bitcoin has crashed and everybody's sad and writes about it. Then it goes up a lot and everybody missed the train and everybody writes about it. That's much better. So I'm happy for the cycles if they continue. Like long hail volatility, it's really good for Bitcoin.
Okay, so you're very bullish on Bitcoin. Now tell us about the company that you are CEO of. What is BTCAB? How did you become the CEO, and what is your core business model?
So I became the CEO because I was part of the team that launched the company, and I'm quite naturally, if you can't guess, I'm quite extroverted. I really like talking about Bitcoin, and I spend a lot of time thinking about it, and that makes me a natural. Like I'm a bit of a salesperson for Bitcoin in that sense. I'm very bullish, and I think it's very natural. So that's why I'm the CEO. It's a very selling role. The company itself is the simplest structure that we could figure out to generate more Bitcoin from an already acquired Bitcoin stack, for example. So let's say you have if you invested let's say 10 Bitcoins in our IPO as an example, and we have that as a baseline. Well, our goal is that you have 11 Bitcoin, 12 Bitcoin, 13 Bitcoin over time. If the Swedish krona went up or down measured in Bitcoin is completely irrelevant because we haven't added value. That's just Bitcoin going up or down. But if we manage to give you more Bitcoin without taking too much risk, that's some actual value there. And that's some knowledge, some skill, something network, something that we can provide and work with. So the goal is just to do that. And how do you do that then? Well, you can start by saying what you shouldn't do. Well, you shouldn't have a company and then a huge amount of salaries that goes out and beautiful offices and just that's how you spend money. But how do you generate money? Well, you do the opposite. You get fiat in by Bitcoin. You have low costs or no costs if possible, but that's not possible because being listed costs and having an auditor costs and so forth. But you have low costs. And then you just have professionals that try to generate as much Bitcoin as possible from that stack of Bitcoin without taking too much risk. And you reward them with a success fee, but no base fee, no salaries, no nothing. So we structured that. So we set up a company where we are in control. We raise funds, buy Bitcoin, and generate more Bitcoin from it. We take no salaries, or at the moment, we have no office even. It's just a very straight, pure play, low cost logic where if we generate yield, let's say we have 100 Bitcoins as an example, and we generate 110 Bitcoins later, and we have the same amount of shares, we've generated value because the share has really increased from 110 Bitcoins in total to 100 Bitcoins to 110 Bitcoins, which makes each share more valuable. And there, from the new 10 Bitcoins that we generated, the team and the board and everybody that has worked for the company takes 20% of that. So 2 out of the 10 Bitcoin we generated is the reward for people who work in the company or the board or anyone. So it's a very success-driven team and logic, low costs, and it's just the purest way to generate more Bitcoin from that we've seen and that we've figured out. So I think it's a very nice and clean structure.
Yeah, I like the structure very much, and I don't think I've seen another Bitcoin treasury company that has come up with such a aligned structure when you think about the shareholders, that you only get paid as a management if you generate Bitcoin yield. And you have already started doing that because last week you communicated that so far you have achieved a Bitcoin yield of 6% only in the first 38 days what you have been in the stock market. So can you tell us about the tools and methods that made that possible? And do you have some more tools in your toolbox to generate Bitcoin yield?
Yeah, sure. So from an example there, again, if you had 10 Bitcoins invested in the IPO, 6% yield means that you have 10.6 Bitcoin then generated. So that's value added there that we managed to generate. And that's the value that we create, and that's what's the important part. And you can do that in many different ways. For example, if we have the primary way a Bitcoin treasury company works is that you have your Bitcoin stack, and then you have a share price, and then the share price differs from the Bitcoin stack. If it's above, so let's say the total company is valued higher than its Bitcoin stack, you can do a share issuance, and then that generates yield for the previous shareholders. If you're valued below your Bitcoin stack, you can sell Bitcoin to buy back the share. That generates yields for the shareholders as well. And they both function, it's the same tool in reverse. So it's the two most simple tools. And then apart from that, you can have more creative things like a convertible, a fiat convertible, where you borrow funds, buy Bitcoin, and then Bitcoin goes up in value, so it converts to shares. Or you have a Bitcoin convertible, which is no risk for the company because you borrow Bitcoin and give Bitcoin back if you have to pay back the loan. But if share price goes to a certain level, it converts to shares. And then you have the last one, which is the most interesting right now, which is preferred shares. You can have
this is something that you just communicated about to the market, and correct me if I'm wrong, but you're the first European company that has issued these preferred shares.
Yeah, from what we know, we're the first European company that issued preferred shares or Bitcoin-backed preferred shares, to be very precise. And I know we're the first in Scandinavia, at least. So the logic there is very, very simple. So we wanted to make the most simple tool for us to get fiat in and to use that fiat to buy Bitcoin. Bitcoin increases over time, and it increases by more than the interest we have to pay on those preferreds. Technically, it's not interest, it's dividend. But from a logical perspective, it's much easier to understand if you think of it as an interest we have to pay. So we pay a certain percentage and we buy Bitcoin immediately. The total stack increases by more than the interest you have to pay. Then you generate value for the shareholders by generating more Bitcoin per share. So our preferred share is very simple. We structure it that way. We're of course thinking about more creative preferred shares, but let's see how the market, if it's interesting, if we can have volume in it, and so forth first. And this preferred share, which is the simplest one, is just 120 kroner per share. You get 1 krona per month as dividend, which means that you have 10%, at least today it's 10% per year that you can generate by just buying this preferred share. We believe that's quite interesting for the market, because if you look at other preferred shares today, there's very few in the world and none in Sweden that pay 10% yearly dividend. And also, I would claim that we have the safest and most liquid asset to pay the dividends compared to a real estate company, for example, that has a portfolio of real estate assets, because that's not very liquid. We can always sell Bitcoin to pay dividends, for example, or sell Bitcoin to buy back shares or whatever we're doing. Bitcoin is hyper liquid. So I think this is a very interesting tool for someone that wants to generate 10% per year from their investment, and that believe that Bitcoin is here to stay. Because you can't, let's say you believe in Bitcoin in the sense that you believe it's here to stay, but you don't like it, or you think it might go down, not up, but you accept that the technology, fine, it's the Lindy effect, it's been here for a long time, it's not going to disappear. Then you might be okay with saying 10%, like this company, in our case, let's say we have preferred shares of let's say, for simplicity's sake, 10 million kroner in preferred shares and 100 million kroner in assets, but in Bitcoin. And we pay 10% dividend. So then it's 1% of our total stack has to be paid. You believe that that's very likely that we will be able to pay this. 1% per year is very likely, even if Bitcoin halves. it's 2%. They can pay that and so forth. So you believe that this total stack is interesting. It's a good security tool for you to get your dividends, and you want your 10% per year, then this is a perfect tool. And if you believe in Bitcoin purely, and you're trying to maximize only for Bitcoin, it might be you don't care about the Swedish krona value. Then you buy our share, because we try to generate more Bitcoin per share, and you believe in Bitcoin and so forth. But those are two completely different investors. What's really interesting about our preferred share as well is that it's a monthly dividend. So you get your 1 krona per share each month. It's not you have to wait a year it's each month, which makes it a very attractive, I think, tool for someone that either wants to have theoretically passive income or something like this. So it's a new tool that I think is very interesting for the market.
Yeah, that's very interesting. And at least here in Finland, where I'm from, people are so attracted to dividends that a 10% dividend yield sounds very good to an investor here, I'm sure. So let's see what the demand is. At least we've seen what Michael Saylor and Strategy has shown in the US, that there's a big demand for different kinds of debt or fixed income instruments when it comes to this kind of companies.
Yeah, exactly. And I think generally we have because if there's a huge demand, we still need to increase our Bitcoin stack. We can't just issue. Let's say we have, as an example, again, we have 100 million kroner in assets. We can't go and issue 1 billion kroner in preferreds. That's way too risky. That's how you get liquidated, even though this is technically not possible with preferreds, but still, that's how you ruin your company. What I want to do is build a super solid structure that generates more Bitcoin per share forever, and you can just park your assets there and know that you get more Bitcoins per share forever. That's where I want to put my Bitcoin, and that feels like the logical way to build something like this, because I don't think anyone is actually interested in a company that can go super leverage and generate a lot of Bitcoin yield and then explodes. That's not where you want to park your funds. This is money for your grandchildren. That's how you hold Bitcoin. It's not for you even. You should never sell your Bitcoin. Just hold them for your grandchildren's grandchildren. So you can't optimize for super high yield immediately. That's a really bad strategy to get as much Bitcoin as possible in the long run, because Bitcoin itself will generate the value if you measure in Swedish krona. You should just focus on how do I generate more Bitcoin.
Yes, definitely. And when you think about risks, the preferred share is actually less risky for you as a company than taking out a debt, because basically, when you issue preferred shares, you are not going to pay back the amount because it's a perpetual preferred share. So the only thing that you have to worry about as an investor is your obligation to pay the dividends in that case. So it's less risky than taking out the debt. So that's a very interesting instrument in that sense for Bitcoin treasury companies.
For sure. And also it's you can technically always pause the dividends. It accumulates, but you will not get liquidated. As an example, if we did the same I just take my Bitcoin funds and borrow against them. So I borrow, let's say, 20% more Bitcoin. But then Bitcoin drops 80%, and I'm almost getting liquidated. I'm not going to sleep well. And that's not the risk a shareholder wants to take. In this case, the company can pause the dividend, and then it accumulates, and a larger dividend is then paid out when Bitcoin increases again in value. So therefore, it's a much safer tool for the shareholders.
Okay, so let's talk about the shares next. The Bitcoin treasury companies, or the whole sector, has experienced pretty sharp decline ever since you became public company. How do you view the sector performance as well as the performance of your own stock?
Yeah, so we have generated a lot of for the first days we generated a lot of fiat value. We listed at 210 kroner, and then it increased to 700 kroner or something, and then it slowly went back down to around where we are at net asset value. So what I think is going to happen is that we will see all treasury companies trend towards one in MNAV. So you will have your assets, and then sometimes you're above, sometimes you're below, but it's going to vary depending on the market and the sentiment and so forth. But we're not going to have the 8x MNAV forever situations. I don't think that's a reasonable state of the market. So I just think that what you need to be really good at as a Bitcoin treasury company is generating yield from your Bitcoins, and that's done by either issuing new shares when you have a premium, buying back when you have a discount, issuing preferred shares anytime depending on when it fits, and you have a myriad of other tools similar to this that will be invented or that you can invent that generates this type of value. But I don't think we will see the eternal premium direct share issuance and then it just continues to grow forever, because the market is very sentiment based, and today we don't see any company that has a huge premium. So I think we're just going to slowly trend towards one.
Yeah, that makes sense, and I expect that too. But there's also a possibility for you to create Bitcoin yield if you trade at a discount, so below the net asset value. Tell us about that.
Yeah, sure. I mean, it's quite funny, but as a treasury company, premium or discount is both equally valid tools. It's just if you have a premium, you have to do one thing. If you have a discount, you do something else. And let's say, as an example, let's say we have 50% discount on our shares. That means, let's say, again, we have 100 million kroner in assets, but in Bitcoin, and we're trading at 50 million kroner. Then what we would do is you sell, this is not how it works technically because it's much more complicated, but you would sell 50% of your Bitcoins, and then buy back the shares, because you would then almost like the last shareholder would have all the Bitcoins that is left. It's like an arbitrage almost. So therefore, what would happen to the share price is not that it would stay there. It would slowly start walking up towards the net asset value again. So what we've done there is we generated new shares for the Bitcoin for the share, or new Bitcoins for the shareholders that are left. So it's a very simple and practical tool, I think, to execute to make generate Bitcoin yield when the share price is below your net asset value. What is important is to get good tools for that. So, for example, we set up the company from the beginning so that we have that type of option to buy back shares in a sense. The larger lists, the better lists we get to, the more flexibility we get, the more tools you get to. So we will also always just get better and better and better at executing quicker and quicker on either buying back or issuing shares or this type of thing. So it's a volumes game as well.
Yeah. So from a stockholder's perspective or a potential stockholder's perspective, now that you're trading around the net asset value, there's not that much risk anymore as compared to previously, the first days that you got listed when you were trading at 50% above your net asset value. So basically, there's not that much risk, but there's like possibility for the future returns. It doesn't matter if you're trading up or down from the net asset value. So you're able to generate Bitcoin yield, which means that each stock owns a little bit more Bitcoin per share all the time when you are able to generate the yield. So that's a quite interesting value proposition. So basically, you're getting the Bitcoin performance, but also the possible performance from the activities that you are able to do. And you have already demonstrated that you are able to generate Bitcoin yield. So that's a good one.
Yeah, so another interesting element there is that you don't have if you measure, which is a good measurement, you should measure, okay, if you invest in a company, how quick does it take before you either have reached back to your Bitcoins that you had invested or that you've started generating yield? And the higher the premium, let's say you have 10x premium or MNAV of 10, then what you do is you give the company 1 Bitcoin and you get in return, technically, 0.1 Bitcoin, and 0.9 Bitcoin goes to the previous shareholders. That's hard to generate your Bitcoins back from. If you have an MNAV of 1, let's say, then every percentage that the new yield is generated goes to you, which is really interesting. So the lower the MNAV the easier it is for the shareholder to generate their Bitcoin back. And as you say, it's lower risk in the sense that you invest at Bitcoin price, which is where you can have very low risk of falling, because if we can just buy back the share with Bitcoin, if we go below the MNAV, then it's a type of floor that we can set that makes it so that if you invest at NAV, for example, or below NAV even, then it's a very nice position to generate yield from. So it's a good way to, it's a much quicker return on investment investing at NAV if the company can generate Bitcoin yield. But it's exactly, if it's only NAV and no yield, then there's no purpose. You have to, on our end, we have to be able to generate yield for you. Otherwise, there's no point. So that's an important metric as well, and that's why we're quite happy with. So far, we generated during that period 6%, which is going to become quite a lot of. It's a lot more Bitcoin over time, which we're very happy with.
What is that in compounded terms annually?
So it becomes 60. I think that term became 69% more Bitcoin over a year. But at the same time, that is the current, just the 38 days compounded. And what you know with statistics and everything like this is that the only thing you know when you do a graph is that you're not going to end up where the graph says you're going to end up. That's just how it is. So we're going to try to generate as much Bitcoin yield as possible, but having a CAGR of 69% doesn't mean we exactly end up at 69%.
Yes,
That's
definitely not.
Measurement.
And of course, now that you will use those other tools in your toolbox, you can generate also Bitcoin yield from them, but maybe it's more dependent then on the fluctuations of the Bitcoin itself, especially when it comes to the preferred shares, because then you have to make the difference between the dividend you pay and what you get in return from the ups and downs of Bitcoin. But of course, you have to believe that in Bitcoin to invest in a Bitcoin treasury company.
Yeah, for sure. And what's interesting as well with the preferred shares, for example, is how do you discount that cash flow that is going out? Some investors discount that differently. So we're going to see, it's going to be interesting to see how the market accepts or thinks about preferred shares. At the moment, we haven't issued any, but what we're doing now is that we set up the tool so that we can issue it, and then we're going to be very careful with how we use it to make sure that we don't put money at risk. But at the same time, it's a very practical tool to generate immediate Bitcoin yield for shareholders. So for me, at least, it's a very bullish tool for current Bitcoin shareholders.
All right. So as we're starting to wrap up, can you tell us about your longer term plans? Where do you see BTCAB in 5 years? And do you plan to expand beyond Bitcoin, or is the focus purely on being a Bitcoin treasury company?
Yeah, it's first of all, we're not going to expand, or they have to replace me as a CEO at least if they want to expand beyond Bitcoin. I will not do that. It's just Bitcoin forever, and that's the natural state of things and how it should be. So we will focus on Bitcoin, but the only thing this company is a share price, the difference between the share price of compared to our net asset value and liquidity in the market. That's what the company is, and that's what you're working with. So in our case, we need to get as broad as possible, like listing in multiple jurisdictions, or at least giving access to other investors, getting as much, maybe not marketing, because the results should speak for itself, but over time, credibility by providing Bitcoin per share growth over time. Like some investors, even though if we had a huge increase in Bitcoin per share, would not invest because we've been around for 2 months, not even. But after 10 years and you've generated the yield, fine, okay, they're going to invest. So we're just a tool, and we're going to use that as good as we can to just generate as much Bitcoin yield as possible. And that's done by increasing, first of all, us doing a good job, but then increasing liquidity and increasing our scope and access globally is really what we have to focus on. And then we have only one thing, one asset, and that is Bitcoin, and it's just how it should be.
Yeah, regarding the liquidity and your global reach, you have communicated that you are pursuing a listing in the US stock market, which is, of course, the biggest market when it comes to Bitcoin. So, how important do you think that is?
I think it's very important to provide more liquidity to our share, but it's not as important as us doing a good job. You can't just put a shitty company in the US and then get liquidity. What we need to do is make sure that people understand that we generate yield and we charge nothing for it unless we generate the yield. And if you compare us, and this is the long-term goal, comparing us to an ETP or ETF or ETC, they take Bitcoin from you. We give Bitcoin to you. And today, maybe you don't dare to invest in us because we're new. But if we've been around for 10 years and the ETP has been around for 10 years, and one takes Bitcoin from you and one generates it, I think automatically, and it's just the nature of human logic makes it so that we will start to suck capital from the other instruments, since it's just a better setup. It's a better tool. It's better. I think it's better structured. It's how you should structure this type of vehicles instead of charging a little commission fee, and it's just a dirty way to structure it. Whereas this is pure, clean, and just it measures in Bitcoin.
All right. So, last question. Any advice for our listeners considering BTC AB as an investment, and what should they watch for in the coming months?
Yeah, so first buy real Bitcoin. I think that's a good advice. Don't go and buy our share. It's just this is an extrapolation of Bitcoin. It's a different wrapper. It's a nice tool to generate yield, but the first thing you need to do is go and get orange pilled if you're not. Like, try Bitcoin, use it, lose it, try to secure it, forget the keys, explain to your spouse, she forgets where you put it. It's just do all the mistakes and try Bitcoin. It's the most beautiful financial or beautiful technical innovation we've had in 100 years. And you buy some share, like, that's not right. You start by Bitcoining. Then, fine, you have your Bitcoins. It's secure. It's in cold storage. It's a really good setup, and you feel very confident and you understand Bitcoin. Now, you can think about, okay, how do I generate some yield from my Bitcoins? Well, do you want to take them out of cold storage and send them to FTX and get hacked and get 4%? No. Okay. This company seems to generate Bitcoin yield. It's done it for X amount of years. They seem to be competent people. So maybe I can put some of my assets there so they can generate Bitcoin yield for me. That's how you should think about this company, but you don't start here. That's the lazy approach, and then you're not welcome.
Okay, so first real Bitcoin and then Bitcoin wrapped as Bitcoin Treasury Capital.
Yes.
Thank you very much for the interview, Christoffer.
Thank you.